Ladies and gentlemen, good day and welcome to the Camlin Fine Sciences Limited Q3 and 9 months FY2026 earnings call, hosted by Strategic Growth Advisors. This conference call may contain forward-looking statements about the company, which are based on beliefs, opinions, and expectations of the company as on the date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on a touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ashish Dandekar. Thank you, and over to you, sir.
Thank you. Welcome, ladies and gentlemen, to this quarterly earnings call. We know your time is precious, so we'll get right into it. Joining me is Nirmal Momaya, Managing Director, and Santosh Parab, CFO. Santosh will first give you highlights and numbers of the quarter, after which both of them will answer your questions. Thank you for being here. Santosh?
Thank you, Ashish. Good evening, everybody. I'll directly jump into the business. Yes, this quarter has been a bit tepid. We had a turnover of 572 crores. Where it was almost equal to what we did in the Q2, but there is a 6% hike as when we compare it to the last corresponding quarter. We had been telling you that we will be doing high amount of vanillin sale. We had done almost 700 odd tons in the last year, which is looking at the entire tariff scenario and other things, we had control over sale because we knew that this sale there is more than likely to have higher realizations because of the tariff. As you know, we have been selling at an average price of 12.5, especially in US because of the tariff situation. In this quarter, we did 490 crores of sales to the third party. However, there is in the internal channels, that is with our subsidiaries in India as well as in the financing distributors, we have around 650 tons, out of which around 500 is committed sale at 12.5. But the recent reduction of tariff to 25%, we can have a benefit of that on the 400 ton stock which we have in the some part of it will fall in the quarter 4, and then major portion will fall in quarter 1. From quarter 1, the real benefit of this will be appearing. So vanillin we did 490, which is around tons, which is around 55 crores with a realization price of 12.5. As far as trades, the main ingredient business is there. It has seen a fall in it. It has come down to 80 crores from 87, primarily for two reasons. One, the prices have been going down, and that's what is impacting our margins. And as you know, there are local manufacturers who have come, and there's intense competition in India itself. Plus, this business has a very plateaued growth, and hence there is an intense competition. We had some bit of lower volumes also, but the major portion was because dip in the realizations on states. As far as blends is concerned, we have been saying blends has been the hallmark of our business, and we have grown by around 11% corresponding quarter and almost 13% this quarter. We clocked around 271 crores in this quarter. Of course, this also was pushed by our recent acquisition which happened on December 1, the French company, a listed company, which contributed almost near to 13 crores in this quarter, and that has also helped to grow the business. Blends remains on track. It is going to grow at a very high growth rate of what we have been saying. As far as performance is concerned, as we have been saying that this is what diphenol, other than aroma and the straights. These are other chemicals where there were always lower margins, and it remains plateaued. So in total, the revenue was 457 crores. Coming to the cost structure, if you see employee cost, we have been saying employee cost has been increasing because we are bracing for this future. We have been acquiring new geographies and companies all over the world, and which requires people on the ground all across who are experts to help us sell. So there's a lot of investment in employee cost which has been happening over last few quarters. Now almost we will be adding few people but not more. So you can see the employee cost has been quite stable. The only increase is because of the acquisition which we did in WinFi. So the salary also increased 1 month in WinFi, and generally in the American and Latin American markets, it's like Diwali and Christmas, so there is some kind of statutory bonuses also paid. As far as other expenses are concerned, they remain under control, and we feel that they will remain in this range for the next quarter, and will increase as the revenue grows. EBITDA, coming to the EBITDA, yes, EBITDA expectation of high because we had said that we'll be doing a higher number of on vanillin, which we have in a way controlled it to take the benefit of the tariff, because if you would have sold now, we would have lost. In any case, realize only $12.5. Delaying the sale into the subsequent quarters will help us to get $2 to $3 more per kg, and which is plain cash and entire EBITDA. So that was a plan to do. Yeah, you would have also learned that we had disclosed that there was a fire incident last Saturday at our one of the blending unit in Brazil. It was a massive fire at one of the machines which was being commissioned, and the fire was of such extent that almost we have lost all the stock which was there in the. It was along with the warehouse, this unit. So, however, we have another unit also which is working and is operational. Obviously, we will keep on continuing operation. Brazil was looking forward. There was great traction, and it remains very interesting orders on various blends, as well as biodiesel market, which is a market in Brazil. We have trying to provide raw material from our nearest geographies and also from the local distributors. We want to keep the sale happening, obviously, because we are sort of buying on spot. Bit of margins will get impacted, but we are trying to keep the traction on sales, keep our customer service, honor all our orders. As far as today's condition is concerned, the survey is expected, insurance survey is expected to start tomorrow. At this moment, we feel that we are adequately insured. The surveys generally take 3 to 4 weeks, so there will be clarity on the surveys and other things. We are also using tollers, local tollers, to also satisfy the manufacturing and servicing the customers. At present, the unit is entirely closed. We don't think it will be immediately usable. As the time passes, we'll see how to rebuild it, where to rebuild it, and other things. You would have also read in our results that we have filed for our statutory board auditors have already filed for a petition for liquidation of Europe. Naturally, the continuing business of blends will continue, though the entity will be closed, because we'll be shifting that business to our other companies in Europe. So we are not worried about the revenue of continuing business, but the good thing is that the cash burn which has been happening will certainly stop going forward. The plea with the court is scheduled on February 26th. We'll have more clarity, and as per the requirements, we'll keep you updated on that. You would have seen that there were some few exceptional items also in this quarter. As we acquired WinFi, the acquisition related costs, the due diligence costs and other things had to be recognized which was around 3.69 crores, which has been accounted. Obviously, the new labor code, we had aligned our salaries much earlier, so we were very near to 50%, and hence you could see that even though we have around 800 employees in India, the impact is not high. Other aspect is that we have a very younger team, workforce, hence there is part service less. We have provided for all the required under the statute what is to be provided already, which is 2.25 crores. We have also provided for an advance sum loan, which was a very old loan which we had given for some project, which unfortunately we don't think accounting provision is required, but we still will be trying to recover it. So subject to that, the PAT has been impacted for this, and we have also shown the discontinued business, which is mainly on account of Europe. It's around 9 crores, and some portion on China. China is also on the verge of liquidation. We have filed the necessary documentation. We accept that it will move. The liquidation process will move before the end of this financial year. Remaining year and going forward, we feel that vanillin is the business, and the good thing is that it has already, the duty has come down by 25%, and very in near future it will come down furthermore. Blends has been doing. We have this inorganic acquisition of WinPi, which will certainly help us to grow our business at WinPi, as well as those products we will be replicating and selling all over the world. So the blend business is going to keep on growing at a same pace as it was in the earlier period. Now we open the forum for questions.
Thank you very much. We will begin the question and answer session. Anyone who wishes to ask a question may press star and one on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question comes from the line of Rishikesh Shah from Alchemy Capital. Please go ahead.
Hello. Yeah, hi. Am I audible?
Yes, sir, you are. Please go ahead.
Yeah. So my first question is, currently I have vanillin realization at $12, right? And you mentioned that they may increase by $2 to $3. So according to me, let's say your realization in US is $18. If your tariffs move down by 25%, then your realization should increase by $6. So where is the disconnect in this?
So the price in US is around $18-19. That's correct.
Right.
But what comes from India was being 50% duty has to be paid. So to match the realizable value, because there is a local manufacturer that's always who's selling at 18 who doesn't have the duty. If we have to match the price of 18, we have to bear the duty. Hence, we used to transfer the material from here at $12, pay the 50% $6 duty, which is cost to us, and sell in the open market at $18. So that's why the realization was $12. Now, if the duty becomes 25, we will get that additional duty which we are paying to the government, will help us increase our realization. In other words, we will be selling at around $14.5, pay the duty at 25%, which will match the local price of $18.
Okay, understood. And what is the volume guidance for FY27?
For FY27, we have both methyl vanillin and ethyl vanillin, and our guidance for FY27 is between the two, the total would be 4,000 metric tons.
Okay, understood. And so I had one more question regarding WinPi. What was the revenue for the full year for them? I know we have consolidated from December onwards, but just to get an idea.
12 million, 12, around 13 crores was their monthly, which has been consolidated. But the turnover has been in the range of 12.5 crores on a monthly basis till December.
Okay, understood. And sir, our margins are down like to 5% this quarter. So what do you think is a steady state margin that we can expect after we have when vanillin realizations going up and your volumes also increasing on vanillin side? So what are the kind of margins you expect, gross margin as well as EBITDA margins from next year onwards?
Sorry, Baba. What is the margin?
Hello.
Yeah, one sec.
Yeah. Okay.
The gross margin, as you said, were impacted by the Straits business. As I said, the realization have come down. Almost the sale price of TBH to BHA, which is down by around $1. The cost remains the same, so that has impacted us. So the EBITDA, the gross margin, which have come down because of the sale price decrease. Then it was 46% in 9 months. Quarter two, which has come down. From 46%, it has come down to 45.8% in this quarter on operating revenues, and this is mainly because of impact of Straits, and also the new acquisition of blend also will take time to settle. So there is a cost is there. EBITDA margin has got impacted also because of the mainly because of Strait, and we have sold lesser amount of volume in this year, which impacted the fixed cost on the vanillin business. That's why there is a reduction of around 55 basis point on the EBITDA margin as compared to quarter two. So it was 7.3, it came to 6.7.
To answer your question on next year, FY27, the gross margins should improve by at least a couple of percent with higher realization of vanillin, as well as growth in the blends business, which is also, depending on the product mix, there could be an improvement in margin. So our guidance is that we should improve the margin by 1 to 2%. It'll be in the range of 46-47%. And EBITDA margins, based on the growth that we are projecting in vanillin and the blends business, should improve and go to to between 12 to 14%.
Okay. And sir, we already are at 46% right now. So, and you are saying we'll be at 46 to 47%. So, yeah, so it should be higher than that, right? 48, 49 or something.
We are at 45 right now. We are at 45,
right.
So we are saying we go to 47
also. Okay, understood. Thanks a lot. And sir, once again, EBITDA margins from 12 to 14%.
Right.
Okay, understood. Thanks a lot, sir.
Thank you. Our next question comes from the line of Satish Kumar from InCred Equity. Please go ahead.
Hi, sir. So I just wanted to understand what is the duty right now in US? It is 25% or it is only 18%?
No, it is 25%. What is expected is once the trade deal is officially signed and announced, right now only fact sheets and some other documents have been shared by both sides. But once it is finalized, it will come down to 18%.
But today, whatever has been cleared from India in US, whether it is in bond or coming from the ship, the duty is 25%. So the additional duty which was levied on 27th of August 2025 of 25% because of Russian oil, that has been knocked out. But the first increase to 25% on 1st of August 2025 still remains. And that could come down after they sign the treaty deal between India and US.
Okay, got it, sir. And sir, the second question was that you were saying that we didn't do some sales this quarter of vanillin. So what was the quantity and of that?
So we will say that we would have pushed and sold another 200 tons. We went slow and tried to push it in the next quarter so that we get the duty benefit. So we would have made around another 200 tons at $12.5.
Okay, got it, sir. And so the next quarter, our sales vanillin sales should be in the range of what, sir?
In volume?
Yes, sir.
Yeah. So what we are doing now is we are taking a campaign for ethyl vanillin. Starting in the next week, we will start the production of ethyl vanillin, which we expect by March we should be able to produce another 300 tons or so. And we produced another 300 tons of methyl. So we should be in the region of 600 plus tons.
Satish, to add to this, we have a challenge stock of around 550 tons. Of that, 150 is at $12, which is already committed. So, and another additional 200 tons is likely to be manufactured and sold. So you can just count that number.
Yeah. Okay. So maybe around 700 tons kind of range, right, sir?
It should be between 600 and 700 because half the quarter has gone, the Q4. So.
Right. Got it, sir. Got it. Thanks, sir.
Thank you. Participants who wish to ask a question may press star and one on the touchtone telephone. Our next question comes from the line of Surya Narayan Patra from Phillip Capital India Private Limited. Please go ahead.
Yeah, thanks for the opportunity, sir. First question is on the vanilla pricing. Sir, it looks like that both US as well as the Euro pricing currently look similar during the tariff period. So in the post-tariff scenario, if the US pricing is likely to see a rise, so whether we should expect similarly in the Europe also?
No, not in Europe. So Europe, the anti-dumping duty on Chinese material is 131%, whereas in the US, it's effectively with the tariff at about 265%. So there is a difference. That delta will remain. The DDP prices today in US are $19.5 DDP, whereas in Europe that is around $15.5.
Okay, and we will that be
differential will remain.
And our realization would be slightly lower than the other party, obviously.
Yes, okay. Right.
And in US, what is the price differential between the ethyl and methyl?
So typically, the price difference is between $1.5 to $2.
Okay.
In the US, that's about $21 or so.
Okay.
DDP.
Okay. Sure. And second question is on the WinFi and Vitafor integration and way forward. If you can just talk about it, because this is a year of acquisition, integration, and some strategic plans about it, people addition, all that. So next year, going ahead, how should one really think about those two business and that's contribution to the overall blends?
Yes. So Vitafor, as you know, is in the animal feed side of the business. After acquisition, we've got several registrations now for several of our products in many countries. So the push on Vitafor is going to be in the coming year in FY27 is to scale up from where we are currently at roughly 12 to 13 million euros top line to take it to about 17 to 18 million euro top line in the next financial year. So we're looking at least a 40-50% growth there. We've launched the product in the US market, in Mexico, and in the next quarter we are launching it in the Brazilian market, as well as we've launched the product in the Indian market. So wherever our own sales force is is operating. We have launched these products. We are increasing our reach to the other parts of the world through various distributors. And also some of them, some countries we are yet in registration process. So all of that will kind of start opening out in FY27.
Okay.
And for WinPi, the next one was on WinPi, which is doing about 11 million euros of top line. In FY27, we look at, again, scaling that up by at least 40 to 50%. We've got several businesses in different parts of the world where our products have been approved by customers. Here, of course, there's no registration, but here the approval process with customers. And we're pushing hard to see if we can grow it even faster than that. We've launched the product in India. We've launched the product in Mexico and Central America, in Brazil. So wherever again our sales channels are there, we've started introducing these products.
Okay, sure. Sir, next question is about the base business, the antioxidant business in ingredients. So that has been seeing a kind of continued competition enhanced either because of Indians or because of the Chinese.
Yes.
Also the kind of a price pressure also, that is a separate thing along with the crude. So given that, is it fair to believe that, okay, this is a kind of this business is likely to see a kind of kind of a decline or something like that? If that is a continuous phenomena, so what is the utilization of the diphenol plant that you're anticipating for next year?
So for diphenol plant for the next year, we calibrate the diphenol based on catechol. Really, it's not so much the hydroquinone; it's more the catechol. Because hydroquinone, even if we don't do value addition, with the antioxidant business, there are some opportunities in performance chemicals that we can do. But the idea is to, at this point of time, we're saying the diphenol capacity we will run at similar as what we had in the current year. And there is enough outlay for us for HQ in the coming year, because we have some contracts that we have signed also, so which will give us some volumes for selling hydroquinone and catechol. Of course, vanillin is the big outlet for us.
Okay. Just to clarification I wanted, sir, on this fire impact, is it or whether we are likely to see any kind of impact in the coming quarter, although it is fully insured? That is one. And secondly, are we getting any out of the liquidation process, sir?
No, sorry. What was the first part? I couldn't. Your voice broke.
Okay. So about any fire impact that we are likely to see in the upcoming quarter for Brazil, although it is fully insured.
Yes. So that we will have to see how the insurance process goes. Very difficult to predict right now whether there will be any impact, and if so, what will be the impact. At this point of time, in fact, the access to the premises has not been allowed as yet by the fire department, because they want to check the integrity of the structure and they don't want any other mishaps to happen. So very, very early days to say whether there will be an impact, and if there will be an impact, what that would be.
No, it is not only the kind of a fire-related loss, business loss in the subsequent period.
So in the business loss, not really. We have the blending unit, which was our original blending unit. This was unit 2, which was just commissioned right now for looking at the expanding numbers that we had. So, and in fact, the incident happened with a brand new equipment also, because that site was just being started out. So, in terms of manufacturing, there will not be so much of an impact for us. If there is any shortfall, because we have some new contracts that we are signing. So for which, if there is a shortfall in capacity, we have contract manufacturing tie-ups in place, which we'll be able to service. Having said that, of course, since the raw material was destroyed, we have to arrange for raw material immediately for servicing the business that we have on hand. And that possibly can have some impact on margin in Brazil for the short term, for the for the next 1 month or so, till material which is on water will reach Brazil. I mean, already there's a lot of material which has been shipped out in anticipation of all these contracts. So that should start hitting Brazil in the next 15 days. So there would be some impact, but we are trying to buy material locally, and of course it will be more expensive than what we would have supplied from India or from Mexico. But having said that, it's only temporary. For 1 month or so, there will be an impact on the margin. Not on the top line. Top line will maintain. Yeah.
Okay. And any benefit that we are likely to see from the liquidation process?
Liquidation of Europe?
European, yeah.
Yeah. So no, in the benefit is really the cash bleed that was there, and every quarter that we were taking a hit. Once it goes into official liquidation, which by end of this month, the tribunal or the court will have to decide, and if that is the case, then of course the entity gets dissolved into a liquidation entity, and of course no other impact then will come to us.
But any money realization out of the liquidation is not likely? No,
unlikely. Okay. At this point of time, unlikely.
Sure, sir. Yeah. Thank you, sir. Wish you all the best.
Thanks.
Thank you. Our next question comes from the line of Rehan from Coherent Wealth. Please go ahead.
Hi, good evening. Thank you for taking my question. Am I audible to the management?
Yes, sir, you are. Please go ahead.
Thank you. Just a couple of questions. What would be the margin profile at EBITDA level or gross level for Vinpai and the other acquisitions?
So Vinpai is really started less. It was a stressed asset we have bought. Vinpai is just near break-even on EBITDA. The break-even should be at 15 crores. They have done 13 crores. But they at present they are just below the break-even margin. But as the business grows, they will be not able to sell because there's no much access to the market which we have given. So it will generally go, as the boss said, if it's a 50% growth, it will certainly start giving the margins. But at this point, it's almost EBITDA negative for a month. Vitafor is already broke even and has been making small 4 to 5%, 10 to 12% EBITDA, and I think it will grow as we start increasing the business.
Understood. And if you could just quantify the expense for Vinpai acquisition, I think you mentioned about 3 to 4 crores on employee expense. On the other expense front, we've seen a sharp jump of about 10 to 15 crores on a year-on-year basis. So, and you mentioned, I think it is sustained. Any reason for such a sharp jump we're seeing, or is it only a one-time because of the acquisition?
So it's better to understand the Vinpai acquisition. It's better to compare it with last quarter. The increase in other expenses are predominantly because of Vinpai for a month. So naturally, going forward, Vinpai had generally an operating cost of around 3.5 to 4 crores on a monthly basis. So that will come. That will be an increase in the next quarter. Similarly, there is around Vinpai's labor cost is also around employee cost is around 1.5 to 2 crores per month. So that also will increase. As far as other expenses from other businesses are concerned, we don't think there will be a increase. Obviously, there is a Brazil impact. If it comes, there could be some expenditure on that. But we don't think the other businesses are going to increase. But in the next quarter, obviously, my other expenses and employee cost will increase because the entire 3 months it will come from Vinpai.
But that would be proportionately with the sales as well, right? This quarter was only, I think, 30 days.
Yeah. So it's a 30-day, 12 crores. The run rate is already 12.5 crores. when they were under stress. Now we have come, we'll be certainly improving the business. But looking at this coming quarter three, it's a very short period. In 3 months you cannot. But we think that we'll keep maintain that run rate for the balance year.
Understood. And sir, just another question on vanillin. You have about 400 crores of stock you mentioned?
400
Channels.
metric, not 400
Tons.
crores.
No, 400 metric tons.
Yeah.
And last call we were gauging that we would see some kind of channel inventory easing off. Are you seeing that happening, or are we still seeing a stuck channel
So
for vanillin?
The channel stock. Sorry, what was your question?
I think last quarter when you had the conference call and the quarter before that as well, you were seeing buildup of inventory because of the ADD. And
Right.
you gauge that it would take a couple of quarters before, you have a better insight as to how your demand scenario is going to pan out. Has there
Right.
been liquid, and consistently you guys have also been scaled, which is extremely great in a tough time, but are you seeing a possibility for better tonnage going forward? I know you've given a guidance of 4,000, but I want to understand,
Yes.
can we see European pricing move up to probably
No,
$14,
pricing will not go
$15?
up. No, pricing will not move up. Pricing will remain in that region because the anti-dumping duty effectively makes a Chinese product come in at $15. So that's at DDP level, so which means at a net level it's about $13. So we believe that the prices in Europe will not go up. It's only in the US where the tariff difference of 25%, our margin will improve. And in terms of channel stocks, they are being liquidated. So that's the reason why, we think that we'll be able to scale up our sales from around 2,500 tons this year, 2,300, 2,400 to about 4,000 in the next year.
Understood. And if I can just squeeze in one last question. Santoshji, could you just re-explain that provisional for 11 crores that we've taken for this quarter?
No, the exceptional item.
Yes, I think there was 11, the PDD of 11, 12 crores.
Yeah.
The provisional item.
Yeah. So there are three components: acquisition related cost, labor cost, and we have also made a provision for a doubtful advance from loan, which was given 5 to 6 years back. That was for anticipating a project. The project didn't happen, and hence now, because 5 years are gone, this is an accounting adjustment. We will be taking other actions to recover that.
Understood. Thank you.
Thank you. Participants who wish to ask a question may press star and one on the touchtone telephone. Our next question comes from the line of Rohan Advant from Prad Capital. Please go ahead.
Yeah, sir. Thanks for the opportunity. Sir, what was our vanillin tonnage in the first 9 months of FY26?
First 9 months.
Yes.
1740 metric tons.
Okay. And sir, next year we plan to do 4,000 tons, and even if we realize, say, $14 on an average, that is revenue of 500 crores. In your comment on margins, there you said the gross margin should be at 46-47%. With vanillin scaling up and realizations improving, shouldn't it add more to our margins? Or will the blends business face margin pressure, and that's why the margin improvement is likely to be lower?
So the gross margin in the blends business typically is less than 45%. And we are going to grow the blends business by at least 20 to 25% next year. On a base of 1,000 crores, we are looking at least 1350 crores in the next year. So that's why we are saying overall margin will average out at this price, at this level.
Oh, okay. So your revenue growth should be much higher because vanillin will grow significantly and also the blends business.
Correct. That is the assumption. Yeah.
Okay. And sir, on this 4,000 tons of guidance that you have for FY27, have you committed offtake or you are waiting for spot prices to maybe improve and get higher realizations? How are you looking at that offtake, and how confident are you of 4,000 tons?
So, I mean, in this environment, we've done 2,400. So with large amount of channel stock lying pre-anti-dumping duty in anticipation there. So our assessment is that the market will open up. We are not rushing in for any contracts because even customers are looking at quarterly contracts as opposed to longer ones because they don't know how long this channel stocks will remain. So I think our sense and our estimation comes from the fact that given all the adverse situations that were in FY26, with channel stocks being emptied out, to grow it by about 50-60% from where we were is very likely.
Understood. Yeah. Thank you. Thanks for taking my question.
Thank you. Our next question comes from the line of Neeraj Mansinga from White Pine Investment Management Private Limited. Please go ahead.
So just wanted to clarify, if right now the prices in the US is $19, and if we have a 25% tariff, we'll get a realization of $15. Is it right?
Yeah, about 14 and a half or so, because there is also local freight and things. This is duty paid DDP.
And if the tariff goes to 18%, our realization would be 15 and a half or so, right?
Correct.
And this does not and there can be so, and you said that the potential of price increase in Europe is lesser than US because US has much higher tariff and it's not adjusted to that level, the dumping duty. And is it right that US is 19, and if you assume a 265%, it comes to $23 plus? If I assume, I'm just assuming $6.50 in China.
In China, $6.50 will come to $23. That is right.
Okay, so there's still $4 upside in the price of vanillin if there's a pari passu the way the Europe is trading. Okay.
Yeah.
And sir, if the tariff is the detail is signed today, so then your realization will go up immediately, right?
Correct.
Okay. Then why are you saying that we'll be realizing less value for next year? Because there's a very high possibility of that being signed also, right?
Yes, of course. But till it is signed, it is not signed. We were waiting for this reduction from 50 to 25 for the last 6 months. So, I mean, I can't predict that. No. So we have to assume at 25% and work on that, basically.
So, and on these stocks, please, I could not follow. Very apology for that. You have 400. You have a guidance of 700 tons for Q4. Am I right?
Correct.
And of that 700 tons, how much will be at the $14.5 and how much would be at the 12.5?
So I would say the US will have out of 700 tons, about 350 to 400 tons will be in the US, which will be at a higher realization, and in Europe is at the same realization.
Europe same realization means $14.5.
$12.5. What we are getting today. Yeah.
Okay. And so what about okay. So and is it right to assume the similar ratio would be there for FY27 for the entire 4,000 tons?
Yeah, it will be 60% in the US and 40% in Europe.
Okay, got it. And so how much was the Brazilian value of the stock that you were carrying, which got fire?
The stock value was about 24 crores. 16 million reais. So how much is that in rupees?
Okay, 16 million reais. Okay. And
16 million reais. 16 crores roughly. Yeah.
16 crores. And okay. And this was on this. Yeah. So and what is the guidance on the new plant of the competition starting in the vanillin? Can you give some color on that? Not
one?
I think the US plant was supposed to start for the vanillin. Just wanted to know on that.
In Europe, actually, the European plant.
Sorry.
So that of course that will start now soon, and so the total market, as we've said earlier, that between Europe and US is about 16,000 tons, and the two plants in US and Europe put together have a capacity of 10. So there's a gap of 6,000 tons which needs to be filled, which we expect that hopefully we should be able to fill at least 80% of that.
Got it. So, before yes, sorry to interject. I'll just correct the numbers because on the Brazilian loss by fire, total loss at the book value is at 33 crores. Out of that, 28 crores is inventory. He told 16 million. That is Brazilian real. The Indian rupee is 28 crores and around 4.5 crores of machine and equipment. So it's total 32.7 crores, right?
Got it. So if there's a delay in the insurance, then is it possible you'll write off next quarter and write back whenever you get that amount?
So that's an accounting thing. How the insurance companies look at it. We are confident, but you know how the insurance companies, there are cuts and things. If the insurance claim is finalized and there is no dispute, we may end up recognizing that shortfall in the next quarter. But it's not at all determinable at this stage because the surveyors are not even entered that factory site.
Got it, sir. And sir, just I think you said about the channel stock. Do you have any clarity on because the US pricing will only go up to 23 once the channel stock is totally liquidated? So any color on that side?
No, I think it is more driven by what our competitor in US does in terms of pricing. So since they are the leaders there and they define the price, we just follow. In that sense, the price will be really defined by them. Currently, this is the price that they've defined, and as the channel stocks do come down, they will probably increase it by $1 or so. I don't think they will take it to match it to the anti-dumping duty impact. They'll keep it just below that.
Understand. So last question on the China and the Europe cost, which were for the factories which are shut down. What was the run rate last quarter, and what will be the run rate in say Q1 of next year?
So in Q1 of next year, as I mentioned earlier, we'll be in by end of this month there will be a ruling on the liquidation, and if it goes into liquidation, then there is no impact to us on our balance sheet on a running cost basis. And even China is the same. By end of this quarter, that will also go into liquidation or winding up. So our estimate is next year we should not have any significant impact.
And what was the impact for Q3?
So Q3 was 8 crores on discontinued business of Europe and a crore rupees on a quarter of China. Both of these, if the plea for liquidation is accepted, then pro rata will not have any cost from February on Europe because it is straight going to liquidation. As far as China is concerned, there is a different process. So we may have to bear 1 crore expenditure in the coming quarter and maybe another crore in the next quarter.
So after Q3 of 27, your cost will become zero. Which cost run rate is today?
In this year itself, in the next quarter,
China will be there.
Europe, the hearing with the tribunal or the court is on February 26th. If the plea is accepted and given, then the bleed stops immediately because liquidation, then it goes to the liquidator. Liquidator becomes the operator of the company we are out. So if it doesn't happen, courts may take their own time, a few months. It's Italy, so it's very fast, but they may take a few months. In that case, the control remains with us and we may face that cash bleed of 7-8 crores next quarter also on Europe. China, has a 1 crore run rate of bleed because we had to keep some people there to look after the proceedings of liquidation. We may end up 1 crore rupees of bleed for 2 more quarters.
Got it. So our run rate after this goes down, the China and the Europe, the EBITDA will improve by 9 crores per quarter.
At present,
Right.
this bleed is not shown in operational EBITDA. It's shown as a discontinued business.
I know.
So it's more
Thank
of
you,
a
sir.
cash bleed. So how you do at EBITDA is, if it is net of that, then there's no impact on EBITDA.
Got it, sir. Great. Thank you. Thank you very much for the information.
Thank you. Our next question comes from the line of Chaitya Doshi from InCred Capital. Please go ahead.
Hello. Thank you, sir, for taking my question. Sir, just a couple of questions. Sir, have we got
Sir,
the
can you speak a little louder?
Hello, is it audible now?
Yes, sir. Please go ahead.
Hello, is it audible now?
Yes.
Yes, sir. Please go ahead.
Yeah. Sir, have we got FSSAI approval for Essential 4001? Hello.
Sorry?
4001.
Hello.
Yes.
Have we got FSSAI approval?
No, we
For
applied
SS
for it.
Acha,
Yeah,
okay.
not
And what is the status of selling WinCurd in Indian market?
Yeah, so there is a potential. So we are working on that.
Okay.
Yeah. So it's basically the market is large. I mean, the cheese market is growing in India, and WinCurd is a product which goes into manufacturing cheese. And so the process is, of course, these are all processing aids. So most producers don't really need to get FSSAI because we are FSSAI approved, but the product doesn't need to be because it's not part of labeling. So that's a question of interpretation. So I mean, that's something that is in the pipeline.
Okay. And sir, so what would be the overall take on vanillin sales for FY27 guidance, and what would be
We've
your
already
value
said
growth?
that. No, we've already given that, no?
Okay. And
Yeah.
guidance for blends?
For blends also, we've given that 25% growth over FY26.
Okay. Thank you, sir.
Yeah. Thanks.
Thank you. Our next question comes from the line of Shikhar Mundra from Vio Commercial Limited. Please go ahead.
For the company as a whole, what kind of revenue guidance are we targeting given for the next couple of years, 27 and 28?
So 27, we should be looking at about 2,200.
2,200. Okay.
Yeah.
Okay. And for 28?
That'll be about 2,400.
Very well. And it's considered as of now.
Sorry?
Considering similar prices as of 2,200 is considering similar prices as now of the products.
Yes.
Okay.
Yes.
And what kind of capex are we looking to put in for the next couple of years?
So at present, no new plants. There is a maintenance capex which keeps on coming because of the big plants which we have. So we have a maintenance capex of around 40 to 50 crores on an annual basis. But at this moment, we have not any capex plan approved or otherwise.
Okay. So the kind of debt levels we have, so these are kind of peak debt levels?
We may require, if I'm going to increase my revenues, there will be
the working capital is fine. I meant the long-term borrowings. So these are peak
nothing
long-term
on cards. Nothing on cards. These
Okay.
are being repaid, and they will go on as around 40 to 50 crores, which is repaid every year.
Okay, got it. So, I mean, I want to understand for as a company as a whole, there are so many moving parts. You know, there's vanillin, then there are blends. So, if the vanillin prices rise, the blend prices are falling. So, I mean, something or the other is pulling our performance, down. So, how should we look at it? I mean,
Very difficult to answer that question. Yeah? Our blends prices are not falling. Our margins in the blends are quite stable. Gross margins are not falling. It's only in the straights business, which is the TBHQ, BHA business, where the margins have fallen in this year. And vanilla, the gross margin remains stable.
Got it. Thank you, and all the best.
Thank you. Ladies and gentlemen, due to time constraints, we take that as the last question. I now hand the conference over to the management for closing comments.
Ladies and gentlemen, ladies and gentlemen, thank you very much for participating in this conference call. We look forward to interacting with you at the end of this quarter. Until then, good day, good evening.
Thank you. On behalf of Camlin Fine Sciences Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.